The SEC initially resisted Bitcoin ETFs due to concerns about the nascent nature of the cryptocurrency market. Regulators worried about fraud, manipulation, and investor protection issues. The lack of clear regulatory frameworks and established market surveillance mechanisms made the SEC hesitant. The decentralized and pseudonymous nature of Bitcoin presented unique challenges for regulators. Tracking transactions and identifying bad actors proved difficult, raising concerns about illicit activities. The volatility of Bitcoin prices also added to the SEC's apprehension. The SEC wanted to ensure that adequate safeguards were in place before allowing a Bitcoin ETF to come to market. One of the SEC's primary concerns regarding Bitcoin ETFs was the potential for market manipulation. The decentralized nature of Bitcoin and the relatively opaque nature of some exchanges raised red flags. The possibility of wash trading, spoofing, and other manipulative practices posed a threat to investor confidence. The lack of a centralized authority overseeing Bitcoin trading made it difficult to detect and prevent manipulation. The fragmented nature of the cryptocurrency market further complicated monitoring trading activity. The SEC was concerned that manipulative practices could go undetected, leading to artificial price movements. The pseudonymous nature of Bitcoin transactions also raised concerns about the ability to trace and identify individuals involved in manipulation. The technological complexities of Bitcoin and the lack of a clear regulatory framework presented significant challenges for the SEC. The novel architecture of blockchain technology required regulators to develop a new understanding. The SEC needed to grapple with issues such as custody, security, and valuation of Bitcoin holdings within an ETF structure. Traditional custody solutions were not designed for digital assets, requiring new approaches to safeguarding investor funds. The security of Bitcoin holdings and the prevention of theft or loss were paramount concerns. The lack of a standardized valuation methodology for Bitcoin further complicated the ETF approval process. The volatile nature of Bitcoin prices made it challenging to determine the net asset value of a Bitcoin ETF. The SEC sought to ensure that accurate and reliable valuation methods were in place to protect investors. Grayscale Investments' legal victory against the SEC in 2023 marked a significant turning point. The court ruled that the SEC's denial of Grayscale's application to convert its Bitcoin Trust, GBTC, into an ETF was arbitrary. This decision paved the way for renewed optimism about the eventual approval of a spot Bitcoin ETF. The court's ruling highlighted the SEC's inconsistent approach to regulating Bitcoin-related investment products. The SEC had previously approved Bitcoin futures ETFs while denying spot Bitcoin ETFs. Grayscale's victory put pressure on the SEC to reconsider its stance on spot Bitcoin ETFs. The court's decision created a precedent that could be used by other ETF applicants to challenge the SEC's denials. This legal victory emboldened other asset managers to pursue their own spot Bitcoin ETF applications. Section 5. The evolving regulatory landscape. The regulatory landscape surrounding cryptocurrencies has been evolving rapidly, with increasing calls for clearer rules. Governments and regulatory bodies around the world have been grappling with the challenges posed by digital assets. The increased scrutiny of cryptocurrency exchanges and trading platforms has been a key development. Regulators have focused on enhancing market surveillance mechanisms to detect and prevent market manipulation. The emergence of clearer regulatory frameworks for cryptocurrencies in some jurisdictions has influenced the SEC's approach. Countries such as the European Union have made significant progress in establishing comprehensive regulatory frameworks. These developments have put pressure on the SEC to clarify its own regulatory stance. Section 6. BlackRock's entry into the arena. BlackRock's application for a spot Bitcoin ETF in 2023 was a watershed moment. As the world's largest asset manager, BlackRock's entry into the Bitcoin ETF space sent a powerful signal. The application was seen as a sign of growing institutional acceptance of Bitcoin. BlackRock's reputation for regulatory compliance added significant weight to its ETF application. The company's meticulous approach to regulatory matters reassured regulators. BlackRock's proposed surveillance sharing agreement with the Nasdaq Stock Exchange addressed one of the SEC's key concerns. This agreement aimed to provide the SEC with access to trading data to monitor for suspicious activity. Section 7. Increased institutional interest and adoption. The increasing institutional interest and adoption of Bitcoin have played a crucial role in paving the way for ETF approval. Major financial institutions have started to allocate portions of their portfolios to Bitcoin. This growing institutional acceptance has legitimized Bitcoin as an investment asset. The influx of institutional capital into the Bitcoin market has demonstrated the growing demand for regulated investment products. Institutional investors require regulated investment vehicles such as ETFs to participate in the market efficiently. The increasing institutional adoption of Bitcoin has also helped to address some of the SEC's concerns about market maturity. The increased trading volume and market depth associated with institutional participation have made the Bitcoin market more robust. Section 8. Potential impact on Bitcoin prices. The approval of a spot. Bitcoin ETF is widely anticipated to have a positive impact on Bitcoin prices. By providing a regulated and accessible investment vehicle, an ETF would open up the Bitcoin market to a wider range of investors. This increased demand is expected to drive up Bitcoin prices. A Bitcoin ETF would make it easier for investors to gain exposure to Bitcoin without having to directly hold or manage the cryptocurrency. The ease of buying and selling ETF shares through traditional brokerage accounts would further increase accessibility. The increased liquidity and trading volume associated with a Bitcoin ETF are also expected to contribute to price stability. This increased stability would make Bitcoin more attractive to institutional investors. Section 9. The future of Bitcoin ETFs and cryptocurrency regulation. The future of Bitcoin. ETFs and cryptocurrency regulation is likely to be shaped by several key factors. The ongoing evolution of regulatory frameworks around the world will play a crucial role. As regulators gain a deeper understanding of cryptocurrencies and blockchain technology, they are likely to develop more nuanced approaches. The increasing institutional adoption of Bitcoin and other cryptocurrencies will further influence the regulatory landscape. As more institutional investors enter the market, regulators will face increasing pressure to provide clear rules. Technological advancements in the cryptocurrency space will also shape the future of ETFs and regulation. Innovations such as improved scalability and enhanced security will make cryptocurrencies more accessible. Section 10. Bitcoin ETF options and their significance. The potential approval of Bitcoin ETF options would represent another significant milestone. Options contracts would provide investors with more sophisticated tools for managing their Bitcoin exposure. This increased flexibility would attract more sophisticated investors. Bitcoin ETF options would allow investors to bet on the future direction of Bitcoin prices without having to own the underlying asset. This would enable investors to profit from both rising and falling prices. The introduction of options contracts would also enhance price discovery and market efficiency. The approval of Bitcoin ETF options would signal a further maturation of the cryptocurrency market. Section 11. Conclusion: a new era for Bitcoin. The SEC's evolving stance on Bitcoin ETFs marks the beginning of a new era for Bitcoin. The approval of a spot Bitcoin ETF would represent a watershed moment. This development would usher in a new era of growth and maturity for the cryptocurrency market. The increasing regulatory clarity and the availability of regulated investment vehicles will attract a wider range of investors. The integration of Bitcoin into the traditional financial system will have far-reaching implications. As cryptocurrencies become more widely adopted, they have the potential to disrupt traditional financial intermediaries. The journey towards Bitcoin ETF approval has been long, but the recent developments suggest that the finish line is finally in sight.